Um, I just want to make another review of step index. I was just doing the back testing, then I saw this beautiful price action, then I said I need to share with you guys so that we can also be able to, practice and understand what I see in the chart. I did receive some of the chart already for some people, the way they approaching the price. I'm happy to see the improvement on people, and I'm happy to see what people they're doing. That they're also giving like a power to say, okay, let me push, let me do ABC, let me try to help these people because they are showing that uh, they want also to know the stuff like really the way they're happening. So those kind of people, we must be behind them, we must support them, we must show them the way, you see. So there is things that I want to talk about also is this one, is that I see so many people when we send, let's say, a chart like this, we request for them to do the practice so that where they have a problem, we can try to help them, but they don't care. Um, they don't even want to work, like send the chart and try to send back what they see in the chart. There is only 3 or 4 people that they are improving, and the one that they are putting their effort to understand what is happening in the chart. So anyway, guys, as I told you last time, by watching the video, by practicing, you're not doing anyone favor, you are doing yourself a favor. Either you want to watch the video and practice it yourself. Me, I don't have any problem. So the first things that I saw on this chart is this one. If we can check market start from this area, the way market was pushing to the upside, market was just following structure. So if you can check when we break this eye, market trade inside. If you want, you could mark even this level, start from here. We will mark this block and see how market is going to react from our zone. But anyway, if you check here, we have this mitigation block, market trade inside this mitigation block. At the same time, if you go to M30 on this area, you see there was a block plus this imbalanced candlestick, the one that market left here, then push to the upside. This short-term low, the one that is, sorry, short-term high, the one that give us this low that come and mitigate here, was also a level that we need to monitor when price is going to the upside, plus this one here. So what we could see, then you need to ask yourself a question. Okay, why did the market return to this area? Why market is buying here? So I'm going to show you guys on 30, then you see what happened from that area. Then also we have the inefficiency. If you can check, we have the inefficiency between the high of this candlestick and the low of this candlestick. There was a price inefficiency there. So from what we know, price has to return back to that inefficiency to fill the inefficiency. It's not like they need to fill the inefficiency, but one thing we need to understand, what is that they are going to do inside that inefficiency. That is something that you need to keep in mind, because sometimes you're going to see prices going to come touch the inefficiency on top, then continue pushing to the upside, or just come on the 50%, then continue going to the upside, or go again more to the downside and push. Why? Because inside that inefficiency, it must have a decision point, another decision point inside, let's say an OB that must be inside that inefficiency. That is the one they are going to respect. So I'll show you guys why markets come all the way down. If you can check here, why markets come all the way down, then start buying. I'm sorry, guys. Okay, we could see how market was going to the upside from here. Let me just go to M30 so that we can see. Oh, no, sorry. Let me go to M30. 13. So that I can explain properly on M30. Then you see how the price action looks so beautiful on the M30. So this is the area. This is something that you need to pay attention to. What I was telling you guys, we had this, if we check this structure from here, if you go to M15, then you see there is a normal structure that was happening here. because here we had the eye markets with this swing. Market fell to break this eye, then give us the lower eye, then we have the lower low. Here again we have the lower eye, then this lower eye was the one that gave me this movement. And if you check the way price return to this candlestick, the mitigation candlestick, check what happened, how this thing is so perfect when you do understand what is market structure and what is the price telling you. Because after we break this eye point, market did trades to the downside to come and mitigate this area. So we mitigate this area, then market push. Now check here, market give us what you call the low resistance. Sorry, market give us this level. We have this low. Then market give us a new higher from this area. So here we have a shift. You see, we have a shift from this area. Then market break again the level that is there. Market break the level. Let's check. So market break the level because here it is a higher resistance liquidity. Then market break this area. Market come again all the way to the downside because we have this decision level. So all this zone here, as you can check, is an important zone to us to see how market is going to react from here. Then markets, if you want more precision, we could come and use this one. This is where market return and react to it. But we still have this candlestick. You see this candlestick trade inside this one. So this one also become our projection candlestick. The story I was explaining to you guys last time on our Zoom session. We have this projection candlestick. So anytime that market is gonna come, because if you check from this area, we have a sort of liquidity that was resting here. So what do you expect? You're expecting the market to come and run this liquidity because already I've already respect this block. If they continue again more to the downside, this is gonna be like a stop where market has to return and stop this area. So market now start pushing to the upside. Let's see the level where market mitigated this area. Market never come back, but this candlestick, the one we have here, market trades inside. This one, this candlestick that is there, it trades also inside this candlestick, already mitigated. Then this one was the fresh one that lead market stay to a break of structure. This is why you see markets break this zone, then return all the way to the downside from here to come and mitigate this zone so they can push to the upside. Now check one thing. If you check on M30 properly, you see we have the rally, market create a base, market rally again. Then market starts coming to the down, fail to give another higher high, but give a lower high. What is resting here? There is a liquidity that is resting here. Then market consolidate like the way it want here. Here we have the break of this structure. If you can check here, we have the break, market return, mitigate this candlestick, then push more to the downside. Here they fake out, they page liquidities on this zone, then check the way market push to the upside. If you check on H1 from this area, there is something that they mitigate on the left side is the block. They mitigate that block. Now, if you want to take a trade from here, because of this effort, do you see the way price take time to go to the upside when the price is going to our decision point that we have been looking? So you see price take a lot of effort to go to that zone with this compression, the one was going here. Then from this compression, what we need to see normally, we have to look where is the last low that give us a high. So the last low was this one, the higher low that give us this higher high. Then before we take our trades, normally what we normally look is we need to see where markets give us this area as the buyer stop. I can even put like this. Market give us a buyer stop. Then market has to come to the downside. They run that buyer stop. So with a confirmation of us taking a sell from here, we want to see market run this low. Then market has to pull back. This is what happened. We have this candlestick. Market pull to that candlestick. Then from here, we are doing what? We are doing what? We are selling. This is our entry. Then where is our target? We normally know here there was a break of this area. you can check properly, we had a break of that area, then market never returned to the downside. Then we have this candlestick. You see, we have this candlestick. So this candlestick was the one that market was first targeting when they're coming to the downside. Okay, market target that candlestick. So what happened again next year? If you check this level and market, this level is the inefficiency in H1. So market when was coming to the downside, you could see the way market left this voids. Only selling candlestick, market was just selling. There was no any buy movement. Sometimes what we do trade, we look for the 50% of all these voids so that we can take a continuation trade. Do you see this void? Then wait for the 50%, check where market return. Market didn't just start selling again from here. There is a reason, because there is a void. So this is why market returned from this void so that it can start selling. Okay, market now start selling. So one thing that I understand also on this price was this one. So after this movement, I saw market when it gets here, it creates this top, pull to the upside. Then from that pulling to the upside, market drop again all the way. I see like some change of character from there. So already I have to look like, okay, what is happening here? There is a wyckoff off or whatever. Then market give us a test, because we test this line again, market push to the upside, give us the uptrust action, then come to the downside. Here we have the test in a secondary test in phase B. Then market push to the upside more. Come and mitigate this reclaim block, the one that is there. Market drop again all the way, manipulates all the low. As we know, accumulation is the manipulation of the low and the break of structure to the upside. We manipulate the low, we break structure to the upside. What do you anticipate? We're anticipating market to return again back to the downside so that we can continue pushing to the upside. We know we have this decision level, this candlestick here. We're anticipating market to go, that's what we can take another sell position. But before we take a trade, what do you expect? Let us look in it like we are looking in a sort of supply and demand. We don't know about all this wyckoff stuff. What we're gonna do is to wait for stop ants, markets break this area. We run this low, market break again this area to the upside. We have a BOS, then we wait for market. We wait for market to do what? To return to the decision point that is there. Check the void. Market return to decision point so we can do what? We can take our trade. Here we are taking our trade. The first target is this one there. And the last target is here. Why we are going to this last candlestick? Because check, we have a break of structure and market never returned there. But what you see on this one when market is going to the upside? Markets give us a 3D. You see, market give us a 3D. If we want, we can connect it up until that area, whatever. There is a 3D that was happening there. Then market touch 1, 2, 3. Then market test there. Okay, come to the downside. Now, from here, I'm going to explain to you guys about these numbers. So from here, what we're going to see again. How do you take a trade if you want to take a sell position here? Yes, if you are more aggressive, you can take your entry from here. Or what you have to do is to wait for market to break any significant level. We have this demand block. Rally, base, rally. Market didn't respect this area. Sometimes you're going to wait for market to break structure here. Then market breaks structure and continue to the downside, but without you having the entry. But you need to understand what is the price telling you. As long as market is already break a level of a demand, what do you anticipate is market to return back to go and test that zone, to confirm that zone as a supplier level so they can continue with the movement. Check the way they consolidate on this level. Then this last one, go and mitigate this candlestick to become a reclaim block. This one, market mitigate that area, then check the way market start dropping now. Market drop, get on this level, we have this candlestick, they break structure, market return again to the same candlestick. We have a drop, market create a base, market drop again, return all the way to the upside to go and mitigate. But if you remember this level, we mark it in H1 as the inefficiency, the space those two between. Then plus M30, we have the block. So if you go to M30 on that zone, you see we have that block. Markets return to there. Then market start doing what? Start buying. You see what is happening. Market start buying. Right now, market is buying, then pushing to the upside. So this is the way you need to look at this price. This is how you need to understand, okay, where am I going to take my trade? What am I anticipating? What is next movement? You see, those kind of stuff. So you can even check from here. When we break this level here, you see this candlestick. When we break, because this candlestick was the original movement before they break this structure. The market could not hold. But check the way price trade inside it. Let me mark it for you guys so that you can see. Check the way price trade inside it. We are the mitigation, then continuation. So it's something that it requires you to practice. It requires you to look at the price and understand everything the way they are happening inside the market. Okay, we go there, then markets go wherever is going. Now I want to show you the second level why I put these numbers here. So let me show you guys. You see, so this is the second level of how you need to look at the market. How do you know that market need to sell? You need to understand first things is structure. What is structure telling you? So I know market break structure, market drop, market consolidates. You see, market start creating the original movement. Then from the original movement, what I see here was this one. What I see from here was this one. I see market break this level, break again this area, market return to this zone and start doing what? Start buying. So when market is buying, because I have my original consolidation movement, I'm expecting market to do what? To make a pullback. Because here, this is my low risk buy. Low risk buy because it returned to a decision level, then we are buying. We break structure, what do you anticipate? A pullback. This is the first movement. So if you want to write, we can say this is number one. This is number one. Let me put it a bit bold. This is number one. Then when we break again the same area, what do you anticipate again? We're anticipating another pullback. That pullback give us what we call number two. This is number two. So already we know we have the original consolidation, low risk buy, accumulation, reaccumulation. We break, we took liquidity. If you check here, we have a liquidity there on top. We took liquidity there. We took liquidity. You say we read that liquidity, then the market start dropping. If you check again from here, what do you have? We have again the original consolidation that is there, that went and mitigate that level, then drop. This is a distribution, redistribution. Then the target is where? For them to come and take out this low. This line here is the one that we call the offset distribution. So they are done with the movement. Then when they are done with the movement, what do you anticipate? You are looking for market to go below. Either 30, start from 10 pips, 30 pips, 50 pips is the one that is going to be more. So if we check from this area, what you're going to see is the level where we have this breaker. That is why we have that 50%. You see, we have this 50%, the one that is here. So market trade here for the first time. Then this is the candlestick that I explained to you guys, that market has to go to the downside. So let me calculate. I hope I didn't make a mistake on the 50%. 50%. Yeah, 50% is somewhere there. Then we have the inefficiency inside that 50%. So this is going to be the next level where we have to watch the price. So this price model, what is doing for us? It's just helping us to understand that after those consolidation and this pullback, market is going to do what? Market is going to sell or market is going to buy. So simple and straight. So I hope guys this video is going to help you. And by the way, this you can follow the price the way I'm explaining to you. Then you can do it anywhere. It can be in commodities, it can be in indices, it can be in currency, you know, it can be anywhere you want, cryptos, anywhere you want, as long as you know what you are doing and you know how you are practicing. So everything's just gonna be very, very easy for you. So sharp family, enjoy the video.